where are you going to be in 5 years, and how could you have saved $50,000 to $100,000 over those 5 years to reinvest back into yourself, reinvest back into a business, reinvest back into more real estate or other areas that will diversify your wealth to have multiple streams of income?
Yeah.
I think that should be the goal of, it's not how much you made this year and how much you're paying in tax. It's what's the compound effect over 5 years, and what does that mean for your life and for your legacy of your family in the future, and how is that going to impact your kids, your grandkids? There's a lot of money being thrown around on an annual basis that can really impact those things.
What's up, everybody? This is Sam Taggart, and we have a very special guest today who's a vendor at DoorCon, been supporting door-to-door reps and owners for a long time, done door-to-door. We got Tommy Thornburg with Prime Corporate Services in the house, at the house, and excited to dive in on financial stuff. And before I bring him on, I want you guys to check in real quick. It's the new year, and everybody always kind of sets their financial goals, their health goals, and I would challenge everybody to be a little bit more intentional about their money and where they're putting it, how they're planning for it. Like today I'm sending a big wire because it's the last day of the year to really send out wires to get your tax. I'm like, I have to move out distributions. Do I want to take it this year or next year? And a lot of that has to do with, proper planning and proper goal setting. And like, okay, do I keep it in the business? Do I take it out? Do I invest it? Do I, spend it? Do I, buy inventory of some? So if you're somebody that is trying to be somebody financially responsible, or you want to make a lot of money in this business, or you want to be somebody that has net worth and not just like trying to get by paying rent and paycheck to paycheck and sitting there trying to cover your credit card debt, this is a podcast you're probably going to want to pay attention to. So appreciate you being on the show, Tommy, and doing what you do. So Tommy, guys, he has done Prime Corporate Services for the last 10 years. He's their,
10 years.
One of their partners, and manages over 200 employees and 60 advisors. They are estate planning, corporate or business entity setup, tax planning and efficiency there. And then they just really just help businesses. Like they really do a lot just to say, hey, like from a financial standpoint, like where do we support you? So let's kind of get to know you. Like you started in door to door. Like that's always like when I'm like, hey, door to door, let's go. I knock doors. Like, guys, he knocked doors. He did a summer of what we do. Has been self-employed since he's 18. And, the fact that you're like, you understand the power of owning your own business. You understand the power of, that 1099 kind of income. Like talk to us a little bit about kind of your journey in that.
Yeah. First of all, thank you for welcoming me into your home. Beautiful place.
We got Dog here coming in too.
Yep,
so
I love it.
You'll meet Emmy.
Door to door, I only knocked one summer, but I always say it's the best thing that ever happened to me for a lot of reasons. Everyone watching this knows that you are the marketing, you are the sales, you oversee the fulfillment when you do this with integrity. And I think it helped tremendously getting into where we are now. And Prime Corporate Services was started. Steve Harward's the CEO, and right place, right time when I ended up meeting Steve. And we just noticed a huge hole in the entire market for startup entrepreneurs. We started very heavy in the e-commerce space. This is when eBay and Amazon, and there was a big old boom of people opening stores online. And a lot of people don't have the means when they're first getting started to hire these high-power attorneys or these expensive CPAs for the tax planning. So if we were able to come in and help people understand how to structure your business properly, how to have a little bit of tax planning throughout the year. It doesn't have to be every day, every week. It doesn't even have to be every month. But if there's a touch point on a quarterly basis, it makes a massive difference at the end of the year. And what we live by is it is not about how much money you make. It's all about what you're able to keep in your corner. And you're constantly able to learn. Even before this podcast, we're talking about different strategies that are out there. Depreciation is king when it comes to taxes, but keeping more money in your corner long term is the ultimate goal.
Love that. What, I guess, kind of give us a basis of like what you've seen. Obviously you've worked with a lot of door-to-door or solar, roofing, whatever companies. What do you constantly see them doing that you would tell them not to do? Like, what's a common problem you keep running into?
I hear, how do you explain it again? I've heard it on some of your videos where the currency of commission, where
Yes.
it's only a couple sales. I've heard you say that a couple times. I would highly recommend against that. I think that if you understand your profit and your loss on a monthly or a quarterly basis, it's not just a sale when you incorporate what the tax liability looks like. It's a lot bigger than that. So if you understand your profit and your loss, you're not really a business unless you know your profit and your loss. Once you understand that component, you're able to make decisions that help you build wealth and help you build legacy long term, as opposed to living sale to sale. So having an understanding of what your profit and loss truly looks like would be my number one recommendation.
Love that. And so like, as an individual, let's say I'm a 1099 sales rep, what does that mean to me? Like, a lot of people, when they think entrepreneur, they're like, oh yeah, of course they've got QuickBooks, and a CPA, and bookkeeper, and a profit and loss.
Right.
But if I'm just a sales guy, how can I still relate to that?
You're no longer just a sales guy. It's a 1099 that you're treating and operating like a business. There's a lot of very, very successful businesses out there that are one-man shows, right? And I think that's exactly what this comes down to with 1099 door knocking. There's ability to make money like a business. Treat it like a business and you reap the rewards of what businesses have to offer. If you treat it like a hobby, it's going to cost you money like a hobby.
Yeah.
So structure yourself the right way. Most 1099 contractors that we work with will set them up with an LLC, taxed as an S corp. They then can pay themselves a salary or a distribution, but that alone is going to save them between 7 and 8% on their self-employment tax. And it's little things like that that go a long way, right? I know you've preached this for years with the S corp election, but you make $100,000, you're going to find a better place for $7,000 of your income than Uncle
giving
Sam's
it to the
pocket.
yeah. This is guys, literally by filing a couple pieces of paperwork, $7,000, boom, done. You don't have to give to the government.
Yep.
Like if you make 100, imagine you make 200, 400, whatever, right? So like, I think there's an element of just that move that I've still watched people know about it and not even do it. I've seen guys been in door-to-door for 6-7 years, still have never elected as an S corp, and I'm like, what are you doing? They're like, I don't know. It's because they don't want to put their head in. They put their head in the sand instead of like learning about it and just trusting the right professionals, and then they end up costing them $1,000 and they have to give the government. It's like, what the freak?
And at the end of the day, it's good problems to have, right? The more good problems to have you can create as a business owner, the better. A lot of times the people that put their heads in the sand for this tax piece is because they're making really good money. And it's like, I'll just go make it back. I'll go make a couple more sales. Where if you flip that and you look at the 5-year and you zoom out of where you want to be over 5 years, like I also hear you talk about, where are you going to be in 5 years? And how could you have saved $50,000 to $100,000 over those 5 years to reinvest back into yourself, reinvest back into a business, reinvest back into more real estate, or other areas that will diversify your wealth to have multiple streams of income?
Yeah.
I think that should be the goal of, it's not how much you made this year and how much you're paying in tax. It's what's the compound effect over 5 years, and what does that mean for your life and for your legacy of your family in the future, and how is that going to impact your kids, your grandkids? There's a lot of money being thrown around on an annual basis that can really impact those things.
Love that. So let's kind of expand more on this 5-year concept. So I talk a lot about, have a 5-year plan. And even in this industry, I'm like, maybe you want to do this 1 summer, 2 summers, maybe it's a transition job, maybe this is a career for you. I don't care who you are, you should see it as a 5-year play, even if you do it for 2. And that forward thinking, I always say, is the decisions you're making today will look differently if you knew for 5 years you're going to do this, whether you do it for 2 or 3 or whatever. But it's like you're going to treat this more like I'm not an amateur. I need to be a professional at this, and I'm going to be good at this. That includes how I'm structured financially, how I'm saving. So if I'm like maybe newer to this and I'm structuring this and I'm like thinking 5 years, what are some tips and tricks you'd give that rep to set themselves up for success, to see that savings, to see a financial stewardship and some, proper investments or structures for savings, not just on tax, but kind of habits and things like that they could do to really set themselves up for some good net worth?
A lot of times when you ask successful entrepreneurs, business owners in general, and please correct me if I'm wrong here, but one of the biggest expenses you'll ever deal with in your life is taxes, right? And the more that you understand how to play the game of taxes, because it is that, it's a game. There's 72,000 pages of a tax code.
Mm-hmm.
The more you understand how to play that game, the easier it is to win. No one cares about your money more than you do, right? So you can hire people, you can hire a team, but there's professional athletes and multi-millionaires that have been ripped off by those people as well. You don't have to study the tax code or read 72,000 pages, but the more you understand what you're investing your money into, the more you're going to care and be able to make decisions that impact you positively moving forward.
Yeah.
For example, I've been doing this for about 10 years now with just entity, tax, business credit. And even though I talk about it on a daily basis, if I started earlier with investments into real estate and into areas that were going to compound and pay me back while allowing me to depreciate, I would currently be further ahead than I am now.
Yeah.
So a lot of it is mistakes that I have made that I'm able to preach on, because everyone's aware of the home office deductions and writing off your travel, and you need a vehicle to go out to your area to knock doors, and writing off the 6,000-pound vehicle that you can depreciate in full. Those are all everyday type expenses that a lot of people rely on. But I wish there was a bigger focus around you're making good enough money to purchase an investment property, to write off the interest, to do a cost segregation study on that investment property. And not only are you now going to have the asset, but you're going to depreciate it and save what potentially is tens of thousands, or in some cases, hundreds of thousands of dollars in taxes in 1 year, let alone 5 to 10. And I think the more that you can understand and have a team to help you strategize around your money, the better educated you of decisions that you can make of what's best for you and what you truly want.
Yeah.
Right?
No, it's huge. I mean, I look at this year and I was like, do I do the oil play? I get investments all the time. People are like, well, Sam's probably got money. Like, invest in this.
Yeah.
We're raising money for this. Like guys.
Listen to what I have for you today.
Yeah, I swear. It's every day. It's every day. Which is cool because
It's
I
great.
get access to deals that I think a lot of people wouldn't get access to. It's not like they're just getting thrown out. So I always, I vet them and look at them quick. And this one came across my desk. So it was like oil. And I had lived in Amarillo, Lubbock, all up in the oil rigs, and I had sold hundreds of customers that all worked or owned oil, or that's West Texas, but never understood like how do you get investing in oil, where oil is a commodity just like gold, silver. We get gas all the time.
Yeah.
And so there's a price per barrel, just like a currency price or a silver, and they're like, but what's cool is the deduction you get for oil year one on your taxes. And I was like, well, okay, I'm listening. Like a lot of people approach you with insurance, right? They're like, oh, there's a tax play you can do with insurance, tax deferred, the 401k is a tax play.
Captive insurance plans.
Captive insurance plans. So like, if you're listening, you're like, okay, this when you start making a lot of money, you're like, well, how do I keep that money? And there's the captive insurance, and there's 401k, defer money. There's, all these things you can do. HSAs, there's, anyway, so the oil, I was like, okay, I'm hearing, I don't know anything about this tax play. And when somebody says 80 to 85% deduction year one, you're kind of like, okay, if I put in 100, I was going to pay, let's call it 40,000 of that on taxes. So if I can get $100,000 deduction, now I'm getting my money at what is that? 50 cents on the dollar.
It's use it or lose it.
Yeah, it's like I use it. It's like I'm either going to give this 100 to the government, or I'm going to keep 50. I'm going to give only 30 of it to the government and put 70 of it into an investment that pays me a 50% return.
It's amazing.
I'm like, well, why would I do, like, you know what I mean? When you start seeing it like that, you're like, okay, that just takes me spending 3 to 4 hours researching this, getting on a few calls, validating the investment, seeing the track record, trusting the individuals, where are they putting their money? And then all of a sudden I'm like, well, duh, no brainer. Here's my money.
Yep.
I just did a real estate deal. I've got right after this, I got to go wire a couple $100,000 to 70 units. Why? Because he's like, here's the depreciation schedule. Do you need any for this year or next year? Where do you want to put it? I already have a bunch of apartments for this year. So I was like, I don't need it this year. Can we do it for next year? And he's like, yeah, we don't close until next year. So technically it'll be this next year. I was like, okay, cool. And knowing how to properly balance that, where it's like, I make a lot of money, but my tax bill last year is I think it was like 12 grand.
Yeah.
You know what I mean? But it's
Crazy.
like, because I'm doing these types of depreciation or the oil thing or the this, and I'm like, okay, if I plan to make, let's say a number, let's say it's $2 million. I know if I don't do anything planning, I'm an idiot and I'm going to give half of that to the government. It's like,
I know that you make a lot of money, and to hear $12,000, I'm like gonna fall off the couch.
Yeah, I paid $12,000 in taxes last year, and some of you guys are gonna be like, "What?" Like, no, that's because I've been educating myself on this for the last 12 years.
Yep. And when you say that you own apartment buildings as well, and you've done cost seg studies, and those alone have probably saved you hundreds of thousands of dollars
I would have given to the government.
Then you get another deal that's presented to you, and it makes it a lot easier to say, this makes sense.
It works.
Right. Because a lot of people would tell you not to buy in a market like we're in right now. But if you understand the cost savings and you understand the interest play, now you're expanding to have more residual income. Put it in the trust, put it in the will, protect yourself, protect your legacy, protect your family. But now you're keeping more money in your corner on an annual basis to go make more money with that money. And
that's what people look at. They're like, well, why would I invest that? It's only an 8% distribution. It's an 8% return, 7% return. And I'm like, you're not looking at the total of the tax benefit you get. Like, the money you keep is also part of the return. And I think people don't see that.
Yeah. So some of the wealthiest people and businesses in the world, Apple, Amazon, a lot of times those are the examples that I'm sure a lot of you have even heard. They paid less than 1% in taxes. Purchasing warehouse space, depreciating those different assets, inventory. There's so many losses that happen when you're running a business, even down to the level of being a contractor or having reps under your name, business meals, different things that really add up. The best way to beat the tax game is our head CPA calls it death by 1,000 cuts.
Yes.
You're better off keeping track of those expenses on an annual basis and having a quarterly meeting where business owners should feel like the fourth quarter of the year is a shopping spree. That's when you should be replacing your computers, your laptops, your iPads, dumping more money into your softwares and processes that allow you to grow and scale into the next year. And if there's more money left over, now you get to invest into additional assets.
Yep, 100%.
The most real estate that is sold on an annual basis is sold in December. Did you know that?
Oh, I could see that for sure. Because everybody's trying to do a quick 1031. I got to up level. I got to dump this to buy this.
And most of the time in December, that's when a lot of wealthy people are saying, I need to buy real estate to depreciate it for this year's taxes, and now I get to keep the asset.
Yeah.
A lot of wealthy people don't even want to invest in real estate the way that they have. They'd rather keep that money, but they're at least keeping the asset and depreciating against the tax. And even though you may not do that year one, if you understand how to keep profit and loss, it makes it a whole lot easier to be able to do that year two, and so on and so forth.
So let's talk about that. So I'm, make 50 grand a year, maybe 70 grand, 100 grand. Let's break it down to not the guys that are making 7-8 figures or whatever. A lot of people are like, well, I'm not that guy.
Sure.
And I think there's an element of a mental shift that needs to come to become that guy.
Right.
And I guess what are some of the habits or, because like I just posted, I was like, hey, if anybody wants to get on that oil deal, like let me know. It closes in February. And I had like 70 people hit me up. Like I was like overwhelmed. I posted one thing and I was like, oh shoot. So I took it down. I can't even text them all back. I was like, shoot, I'm not trying to fundraise. Like I was like, I could care less. I just was like, it's open, right? And it was funny, but I'm like, how many people hit me back? Because I was like, oh, it's $100,000 minimum. And then like half of them were like, oh, okay. Like
thanks, but no thanks.
Thanks, but no thanks. And I was like, oh, that's interesting. Like, not everybody's got $100,000 sitting around in the bank account when an opportunity comes like that. So do you have any hacks for somebody that is trying to build their wealth, but they can't go and buy an apartment? They can't go buy a real estate deal because today prices are so much and you need 20% down or whatever. Mm-hmm. What things can they do today to start saving or to start small, but they create the mindset and the habit? Like what does that look like?
I love it. There's a couple really cool things that you can do around the insurance play. So when you're self-employed, one of the biggest things that people struggle with is insurance oftentimes. And when you have an insurance plan that qualifies for a health savings account, very, very easy way to contribute money that allows you to keep it in your corner, but do it at a lower rate to where everyone can do it. So if you're single, it's about $3,500 is the limit this year. If you're married, it's $7,300. It usually goes up every year. Next year, it's going up to about $3,600 and $7,500. But to break that down alone, you being married, you put $7,500 into a health savings account. You get the write-off going in. Now, if you use it for medical-related expenses, prescriptions, anything to do with your insurance or your premiums, you now get the tax deduction coming out or when you use it with the insurance. One of the only things that it's a ×3 write-off. You get it going in, you get it going out, and then you can also write off those medical-related expenses.
Oh, okay.
The insurance, the premiums.
I didn't know it was
everyday
a
type
times
things.
thing.
One of the only ones.
Yeah, so
Pretty
that's
cool.
like and it forces you to kind of chalk money away to use for everyday things that you're going to have. Like we just paid a medical bill, it's $3,000 or whatever. You know what I mean? It's like, boom, that would have been triple benefit. Account. Yeah, like that would have gone this way. I don't even do that. That's
$3,000 in, $3,000 out, and then $3,000 for the insurance bill.
For the bill. That's cool. A $9,000 write-off, guys. And then if you're taxed at 30% or whatever that is, that's like right out the gate an extra. What is that? $2,000, $3,000?
I mean, I think we can make this fun. I think we can come up with $50,000 real quick. We got $7,500 in the health savings account, we'll say. Those of you that need to purchase the vehicle or write off the mileage, gas prices have been through the roof, speaking of oil. So a lot of times, one of the things I say is taxes are meant to impact behavior. The government wants us to act a certain way, and that's every year some of the lowest hanging fruit are the recent tax code changes. So the last couple years, business meals have been 100% deductible instead of 50 due to COVID impacting restaurants. Oil goes up, and instead of the mileage being 58.5 cents a mile, it goes up to 62.5 cents a mile for the second half of the year. So there's a lot of changes that happen every year that your team on the tax side should be educating you on, should be helping you understand how to utilize those deductions so that whether you're purchasing a vehicle, tracking the mileage, purchasing a new computer, a new tablet, investing money into these health savings accounts, whether you have $5,000 or $500,000, there's a lot of strategies that can make you more aggressive to keep more money in your corner.
Love that. And it's a mindset. So I have a cousin who is the points guy. Like he's basically the points guy. Like he studies that guy through and through about being meticulous about what credit cards. And
I'm big on that.
Are you big? Okay, I'm not. Like I'm like, dude, D used a coupon the other day. I was like, good job. I don't even look at those. Right? I was so impressed. I was like, she's like, look, I saved $52 on this order. I was like, I wish I was, amazing. Like awesome. Like more people need to do that. But it was so cool to see him travel the world by just moving credit card money and all this stuff. But I thought of the concept of just like him being a steward over like every time, like intentional spending, intentional card usage.
Yep.
Like I was just like, man, I just like use the same card, whatever, blah, blah, blah. But like to see somebody think like food, it's like, am I just scarfing down food in a conversation? It's like, oh shit, I ate like 4 pieces of pizza. I didn't even notice. I'm on a diet.
Right.
Because you're not intentional. I think a lot of times you go to the mall and you're thinking you're going to spend $30, you end up spending $300, and you do that repetitively, and that's a habit.
Mm-hmm.
Or you go, if you go in with like, what card is this? Where's the tax play? What's the return? How long do I really need it? You start building a new way of like a habit around money. All of a sudden, it doesn't stress you. It just becomes like, hey, I have a way that I use money, a way that I save it, a way that I see it differently. And I think a lot of people were educated from a young age when it comes to money wrong. Like they watched their parents just go in credit card debt. They watched them always trying to get by, and then they just repeat the same cycles.
Yep.
So do you have anything to say on that? Like,
I think one of the most, a lot of very, very successful businesses come down to timing, right? I'm big on that as well. I think things happen for a reason. I think people come into your life for a reason. I think that the timing of when things are happening makes a big deal. And the reason that I say that is because when you think about, right now we're in the middle of what people would say not to buy real estate because interests are on the rise and prices are very high, right? A lot of people are very skeptical of purchasing real estate right now. But if you zoom out, for the last 20 years, interest rates are actually historically low in comparison to what they've been. So even though the cost of that home is higher, what are you paying over 30 years? And is it more or less if you take your taxes into that equation? Now, if we start to incorporate credit cards, it's a whole nother level.
yeah.
One of the areas that Prime Corporate, our company, does is we help people build business credit and corporate funding. So your cousin, I'm sure, has a good reign on his tax bill of lowering those points on the taxes, lowering what he's going to pay on what he spends with the credit card, getting free airline use. And where a lot of people are caught talking about a 1% interest rate rise on real estate, there's 10% or 20% that you can save in taxes, reinvest it back into the real estate, take depreciation, travel for free. I haven't paid for an airplane ticket in probably 5-7 years just because of credit card usage. And there's endless things that you can do with that if you're aware of what points they're going to be used for and you're not. There's a huge difference between good debt and bad debt. Going and just buying yourself something that isn't going to get you a return, bad debt. But investing into yourself and what could come from your taxes, good debt. Yeah. Investing into education, investing into yourself and being a credit to your profession. We've spent hundreds of thousands of dollars for masterminds and different things to be a part of this year. I've spoke on a lot of stages with a lot of powerful people this year, and a lot of them have a similar message of successful people make calculated decisions. Your real estate investment that you talk about, the points that your cousins are making, like it's small things that add up in the grand scheme. And those points can make massive differences over time.
Yeah. I've noticed like even successful people that are driving nice cars that are, they seem like they're spending a lot of money. When you start to lift up the hood, you're like, oh, they're actually really smart with their money. Like they're making educated buys at a place in time when it makes sense to buy those things. Like they're not being dumb with it. They're just now in a place where it's like, this is fun, but it's used for this. I got this write-off. Did you know that I got this deal because I knew this guy? You know what I mean? You're just like, oh, and then I could resell it at this because I bought it low. And you're like, oh, okay. Like I had a buddy that bought a jet and I was like, oh man, like it'd be fun to own a jet one day. And like, that's on my vision board. And he breaks it down. I was like, damn, I should buy a jet this year. Because he talked about the tax depreciation you get on year one of a jet. And then he talks about leasing it. And then he has his hangar. And then he rents out space in the hangar. Yep. And then he got the appreciation of the land in the hangar. And then he got, he goes all through this stuff. And I was like, yeah, I make, it still costs money, but it's like not as much as you think it'd be because of all this income I've made from this, this, and this. And I was just like, huh. Yeah. Okay.
But my partner actually bought a jet last year. And this is one of the things that has been massive is you're able to depreciate that entirely in full. And now it's cash flowing on a monthly basis from people renting it out. to use it for personal use or for using it for business use. So not only it ended up saving a couple $100,000 in taxes in year one, but it's also now cash flowing on a monthly basis moving forward. Same thing with real estate, vehicles. I've got a lot of clients right now that are building up business credit to purchase vehicles and using it for Turo.
Yeah, Turo.
And they're making great revenue cash flow wise, riding off those vehicles and able to drive vehicles that they actually want. But to your point, it looks like they have nice cars, but it's strategic. The vehicle that I just bought wasn't necessarily my first choice, but I get an electric deduction.
Anybody listening to this, and I kind of want to wrap on this, it's like there's phases. And I think what's hard to see sometimes, like, somebody texts me like, yes, last night, they're like, how many years have you been in door to door? And I text back 18, and they're like, well, you can't count your mission and you can't count that. I was like, no, dude, like I literally knocked doors, painting curbs all through high school, made good money. 18, shipped out to Texas, made good money. Like that's all I've done. And I was like, oh shit, like there was a lot of real grind time building income to then place into wealth. And I was driving a Kia Optima the whole time. I had a Corolla for half of that. You know what I mean? Like I drove a Corolla, then a Kia Optima that was hybrid, like where everybody else is driving the Beamers and the nice trucks. And I'm over here like, you guys are idiots. I'm buying real estate. And, I look at phases and it's like, you're in the grind phase, be in the grind phase and stack that cash and put it somewhere safe. When you're in the like maintenance and move things around and shuffle phase, you're in the, okay, it'd be hard for me to ever lose phase. Like that's where I want to get to, right? That's where I'm like, I got cash flow, whether I work or not, so good that it's like, I couldn't even spend my cash flow money. Like that's the next phase. And I think that if you can think long-term, like we talked about, a 5-year, a 10-year play of saying, okay, it hurts today, but am I going to be happy in 5 years when I've got an extra $1 million in the bank because of compounding interest or because of tax savings or whatever that looks like? Can you have the discipline now so that you're literally laughing to the bank 10 years down the road being like, oh shit, like look at what it was turned into. Like I had one come back to me literally, he's like, hey, we're finally paying out on that thing you did a couple years ago. And I was like, oh really? What is it? And I was like, oh shit, like I'm glad I put the 50 grand there. You know what I mean? I was like, oh, okay, cool.
That discipline most people won't have.
No.
And when you're concerned and when you're living in it with the day and with the hour, it goes back to the mistakes that I made earlier on when I started making good money. If I invested into more assets as opposed to some of the strategies that I told you, that it was like the tail was wagging me from a tax standpoint as opposed to vice versa. And if I was making investments that were thinking 5 years, 10 years into down the road, I'd be in a much better place than I am now from a financial standpoint. And things are great. Business is going awesome. But it'd be really nice. And I think the more that we can all talk about that, some of you that have been knocking for years have had years that you've overpaid in taxes, or you've been concerned that you're going to get audited because you didn't do things the right way. And that's not a fun place to live in for anybody. If you can stay disciplined in those grind years like you're talking about, you knock on a door, by the way, that counts as a year. I don't care. I don't care who you are.
I know. That's
come on. I don't care what you're selling, what you're doing. You get out, knock on that door, that counts.
I know.
Well,
one other thing.
It's cool.
One of the things I just thought of. This is good. I'm 21, 22, 23. I can't conceptualize money in 5 years because you probably have only been making money for 1 or 2 years.
That's true too. Yeah.
You know what I mean? Like, so for like, I just luckily had a good mentor. My dad, like, he was good and made money and ran businesses. But like, I just thought of like, to think 5 years today, I'm like, most investments don't mature until 3, 5, 7 years, right? Like they don't really see their fruition until then. But you've not even been earning income for that long. So it's hard for you to even like think of it like that. Where if I'm 40, I've probably seen cycles of economy shifts up and down. I've had investments pay out that I put in 5 years ago, like I can trust it. I'm like, oh yeah, that thing that I did 5 years ago. Cause I'm playing almost like solar. Like I sell a deal and it installs 3 months later. I'm like, but I have to always be selling because then I'll always get installs. I'll have installs every week. Mm-hmm. It's like, if I'm always investing, well, in 5 years, those investments from 5 years ago will be starting to pay out, and then the new investments are going in, and so on, right? Like,
Yeah, that's
but it's
true.
it's
That's
building that like pipeline of investments early on that you won't see the fruits, and it's trusting that. It's like, is that going to work? And do you win some? Yeah, like if you're smart, you win most, but you'll lose some. That's fine. But it's trusting, building your pipeline, and I think to any young sales money hungry, like right now, that is the thing. Like, trust that you're building a pipeline of payouts, 5, and then if you do another one next year, then in 6, then you do another one next year in 7. That's when you're going to start to see these things pop.
Yep.
It's fun.
I love it. I think it's great. And at that point, when you start to think 5 years down the road, if one of those investments happens to lose, you're going to need the write-off anyway.
Yeah, because you've been making...
You need a couple to win, and naturally a couple are going to lose. I've had investments that have lost. There's areas right now, if you're watching this, that the cryptocurrency market's upside down. There's ways you could sell off those investments and have loss harvesting to write those investments off against future income. And there's a lot of cool things that you can do even when you lose.
Yep.
No one ever wants to lose. I don't want to lose.
Yep.
But when you do, there's still learning lessons within that allow you to not only write it off and take advantage of it, to offset future wins and income that you're going to be in front of.
100%. Okay, guys, if you're needing help and support and business entity structure, building your business debt, and credit, tax, stuff like that, guys, reach out to Prime Corporate Services. They'll be at Door to Door Con, and you can reach out to Tommy. He runs the sales division. He'd be a good resource or connect you to the right people. But thank you so much for being on the podcast. This was fire. And
awesome.
As always, guys, we love your comments. We love your feedback. Ask questions on this. Drop some lines on the YouTube or the podcast, and let us know what more you guys need help with, or DM me. And hey, can you connect me to somebody about this or an investment there or whatever? We have an expansive network in this community, so here to support.
Cool. Thank you for having me. Beautiful home. Awesome podcast. Thank you for welcoming me into your home. I appreciate it.
Thank you.